Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
Bloomberg Tech is live. Romaine, Bostick here, Caroline and Ed on assignment on the day, but the news doesn't stop. Nvidia CEO Jensen Huang meeting with U.S. President Trump at the White House yesterday. That's ahead of a big trip planned next week to China. Plus, we're taking a look at Tesla, which wants to bring its driverless taxis to California and Arizona. This after last month's rollout in Austin, Texas. And Crypto Week. It's upon us. We're going to discuss what to expect from a slew of crypto-focused bills in Washington with the head of the Blockchain Association. But we get a quick check here on the markets coming off what has been a relatively record week for U.S. stocks. The NASDAQ 100, though, sitting this one out down just slightly on the day, down about 0.2%. Of course, this comes just a couple of days after we had that record run by Nvidia breaking that $4 trillion market cap threshold. Some other big movers on the week and on the day, though, of course, is in the crypto space. You take a look at Coinbase, down slightly on the day, down about 1.5%, despite the fact that it is setting up for a relatively phenomenal week. In fact, you've seen a big bid come into the fintech space this week on the back of crypto hitting fresh record highs and other pockets of the market getting a little bit of regulatory relief. SoFi Technologies up about 3%, a 4-week run there, and some of that has come at the expense of the software space. You take a look at Atlassian, representative of that team, down about 2% on the day as it heads for a slightly down week. Meanwhile, QuantumScape getting a decent bid, up 3% on the day, a fourth straight week of gains as the battery maker continues to see a bit of a delayed reaction to a big announcement that was made at the end of last month. Nevertheless, one of the big risks that you see in QuantumScape is tariffs, and that is where we're going to start the show today. An escalation in U.S. trade tensions on the week that began on Monday with that 25% tariff on goods from Japan and South Korea, two key sourcing regions of components for the U.S. tech sector. And of course, the week ends with higher tariffs on Brazil and on Canada, two key sourcing regions for the tech-heavy auto sector. Bloomberg's Kaylee Lyons, a co-host of Balance of Power, joins us right now in Washington with the latest on what I thought, Kaylee, was supposed to be the resolution of some of these trade issues.
Well, yeah, July 9th, Romaine, was the original deadline. The president, of course, officially switched that deadline to August 1st for all of the countries who have been on receiving ends of these trade letters posted on Truth Social this week. The latest, of course, as you referred to, is Canada, which as of last night is now facing down the threat of a 35% tariff on Canadian imports. That's higher than the current 25% level, though I would note that we are expecting exceptions to remain for goods compliant with the USMCA trade agreement, which is actually most exports, so that could alleviate some of the burn here, as well as for energy imports, which are expected to continue to face a tariff rate of 10%. All of this would be effective as of August 1st, although that does leave some wiggle room here for the Canadian Prime Minister, Mark Carney, to try to reach a deal with this administration. The thing is, though, for both Canada and Brazil, which you also mentioned, the justification the president is using isn't necessarily just around trade deficits and tariff and non-tariff barriers, as we saw for the more than 20 other countries who received letters. For Brazil, it's the treatment of former President Jair Bolsonaro that the president is taking issue with. And for Canada, he specifically points to the trade of fentanyl, suggesting that Canada is still allowing too much fentanyl to come over the U.S.'s northern border, although data suggests that those numbers are very minimal, at least looking back to last year's data. So it'll be interesting to see how they're able to reconcile that particular issue, as each country is going to have to try to work through things in the next few weeks, keeping in mind that the president also said in an interview with NBC News last night that for most trading partners, he's looking at applying a blanket tariff of between 15 and 20%, which, of course, is higher than the current 10% baseline rate that still remains in place, Romaine.
Kelly Lyons down in our Washington bureau, and of course, tariffs in focus, so too are non-tariff trade barriers. Nvidia CEO Jensen Huang was at the White House yesterday, presumably to talk about U.S. technology export curbs that have limited Nvidia's ability to sell its most advanced chips to the largest market for such chips, China. Bloomberg's Mike Shepard joins us right now to talk a little bit more about this. And I know, Mike, we don't know exactly what the two men spoke about, but given the big trip that Jensen Huang already had planned to go to China, I would have to assume that was the main topic of conversation.
Romaine, we have to assume that because China, for Nvidia and for a lot of other American tech companies, is a major market, even with all the U.S. export curbs that are in place. And there is a concern that Jensen Huang has articulated publicly and no doubt spelled out in private with President Donald Trump at the White House yesterday, that Nvidia and other American companies risk losing ground in this key market for semiconductors. China, it's not only the world's second largest economy, it is the world's largest buyer of computer chips. And one of the biggest concerns that they have is that China will be able to gain ground in the area of artificial intelligence if the U.S. maintains this regime of strict export curbs. We did see some relief from that during the president's trip to the Middle East when they began to roll back some Biden-era curbs governing sales of advanced chips to a lot of other countries. And this is a measure aimed at keeping those chips from leaking to China. But that still may not be enough. Jensen Huang argues that we need to be able to sell into China, and that is to perhaps keep its top Chinese rival, Huawei Technologies, from gaining ground in this area of AI chips from it.
Yeah, I am curious, though, Mike. I mean, how much do we know about the support that Trump and the White House overall is willing to give to, if not just Nvidia specifically, but overall to the U.S. chip sector to address some of those issues and address some of that competition?
Well, that's a great question, and it's one that chip industry executives and leaders here in Washington that we've met with and talked to have really been mulling, and they don't know the answer because you're also swimming against a very strong anti-China tide here in the nation's capital. Over the years, so much of the rhetoric has been driven on the national security side that, look, if you sell advanced technology to China, there's a great risk that there will be a dual use for it, not just in the commercial sector, but in the military and national security sphere as well. And that could put U.S. security at risk if China is able to deploy these advanced technologies, especially in the area of artificial intelligence in that way. Hence all these export curbs. And yet what Jensen Huang and others are arguing is that, look, around the world, if the American tech stack is to prevail, we need to be able to sell our chips in China and sell them more broadly around the world without fear of restriction. We don't have to sell the most advanced versions of our semiconductors and GPUs to those countries, but we still should be selling more than we are able to right now so that we can assure that the U.S. has that toehold. And look, the Nvidia CEO and Donald Trump really have forged a rapport. Jensen Huang is becoming a more frequent visitor here to the nation's capital, Romaine. And during this Saudi visit that I mentioned, Donald Trump looked in the audience for Jensen Huang and even called him my friend Jensen. So you can expect that there was a warm discussion at the White House yesterday, Romaine.
All right, Mike Shepard, who, of course, covers this all from us for in Washington as we keep an eye on Jensen Huang as he embarks on that trip next week to China. When we come back here on Bloomberg Tech, we're going to focus in on Apple as it tries to line up its slate of products for 2026, what to expect, and more importantly, will consumers buy it? This is Bloomberg Tech. Apple is planning a slew of new products that it plans to introduce in the first half of 2026. Now, that includes a new low-end iPhone, new iPads, and upgraded Macs. That's the reporting from Mark Gurman, and he joins us right now to talk a little bit more about that. And Mark, let's first start off with exactly what is the sort of complexion of this lineup and why are they taking that particular approach?
Yeah, Romaine, thank you so much for having me. So Apple typically launches a bunch of new products in the fall, and that's going to happen again this year with some twists. So we'll get the usual new iPhone, the 17 line, the usual new Apple Watches, but there'll be a couple other bells and whistles that they usually don't do this time of year. One is an upgraded version of the iPad Pro. Two is an upgraded version of the Vision Pro. That's their new headset. And then looking towards the first half of 2026, usually they release new MacBook Pros with new high-end processors in the fall. This time around, at least currently, again, it remains fluid, they're aiming for early next year. So first half of next year, you'll get new MacBook Pros, you'll get a new Mac external monitor, you'll get new low-end iPads, you'll get new mid-tier iPad Airs, and of course, as you mentioned, the iPhone 17e, which indicates a strategy change for Apple. Now, their entry level, their cheapest iPhone, is on track to be updated on an annual cadence instead of every few years.
I am curious, Mark, about sort of other products that aren't necessarily just updates of existing ones. Whether we're talking about the wearable strategy, the smart home strategy, and obviously any insight that you might have into any sort of developments on the AI front.
Just to put a highlighter on your point, Romaine, because I think this is exactly right. None of these products are revolutionary. None of these products are redesigned. None of these products are wholly new. I would barely characterize many of these as iterative. They're basically what they call in the industry chip and ship, which means you replace the processor in the device with a newer generation component. And as we know, the laws of physics are very apparent with Apple these days. The 50%, 75%, 100% gains that you used to get on an annual basis for new Apple chips, those days are 5 years in the rearview mirror. So in terms of something wholly new, they were supposed to release a smart home hub, basically a home pod with a display, very AI heavy. This past March, they had to delay it as part of the delays to their new Siri features, a feature called App Intents, which allows you to control your device very precisely with voice commands. Because those software and AI features were delayed, they obviously also had to postpone the hardware. I'm told that hardware is now on track for the first half of next year to be aligned with them finally being able to ship those upgraded voice command features.
All right. Well, maybe, I guess, the rollout of these new iterations or whatever we want to call them, Mark, maybe it provides a little more consistency on the revenue front for investors, but for consumers, maybe not necessarily the most exciting thing out there. Mark Gurman, of course, will keep tabs on that. There is some excitement, though, in other parts of the tech space, and that, of course, involves AI and robots. The combination of those two. The AI development platform Hugging Face has launched a new mini robot. It calls it Richie. And users will be able to program the device using the company's open source machine learning platform to enable it to do, well, I guess whatever anyone can think of. Here to discuss is Thomas Wolf. He's the co-founder and chief scientist over at Hugging Face. All right, Tom, let's talk first about the general idea behind what Richie is supposed to do. What is the main benefit or the main added value that someone buying this is going to see right out of the box?
So I think there will be a lot of things. It's an AI robot that's designed to be a human-robot interaction platform. So it can move its head, it can move antenna, it can basically share a lot of emotion with the user, but it also has sensor. It has a camera, it has a microphone, it has a speech, audio speakers built in. And so our general idea is that you can plug this model with, all the new AI models we've seen right now, which can generate speech, which can digest image, we can understand what you say. And we think there is a need right now for a very accessible platform for people to start building this human-robot interaction.
So as people sort of get this device, and the idea, obviously, of it being open source, being, I guess, set up in a way where you kind of have that crowdsource ability to tinker with this thing and make it better, what do you think would be the advancements that we would see most soonest, I should say, most immediately?
So you have to picture this as a device that can be used in many, many ways. So it will ship as a kit, a little bit like Lego. You can build it. You can build it with your kids, with your family and friends. And then it will be provided with a couple of apps already. And I think one specificity as well is that you can run this app locally. So you don't have to actually send data in the cloud if you want. You can also use it, but you don't have to. And so it will ship with a couple of apps. We've already been developing internally fun games where the AI interact with you in a fun way. But what we expect and what we're really excited about is to see the community create new apps, right? So we'll provide a SDK that make it very easy to make new behavior. I don't know, if you're cooking, you put it next to you, and maybe you want to design it as a little cook assistant that comments your cooking, and maybe give you tips for your recipes. And then once you build this, you actually want to share with the community, and that's where the power of the Hugging Face service is crazy, because you can just actually upload this, and it's automatically became accessible to all the other robots. Another user can point on your robot's cook space and use it locally.
I am curious, with regards to robotics, why don't you think we've seen more either open source or open weighted business models in this space?
It's a good question. I think a lot of people have been focusing on these very expensive humanoid robots, right? And the price tag for this is obviously more in the $80,000, right? And so here it doesn't make a lot of sense, I think, to do them open source right now. But when you picture something much simple like Richie Mini, which still has like 10 motors in it and it can do quite a lot of things, but it cannot walk, for instance, then you're making it open source, kind of value much more the type of behaviors you can build and how, the community can use it, and the community that can actually tweak, play with it is much wider than humanoid robots. So I think that's one reason we're maybe the first to tackle this segment.
I know this product's just getting off the ground here. This is primarily designed and made in the United States. And I am curious that as you expand this product and any sort of descendant products out of it, how are you going to navigate, let's just say, a somewhat topsy-turvy trade and tariff environment that has sort of disrupted where you source things and even to some extent where you can sell things?
That's a good question. We've been surprised, actually, because obviously the US market was our first market, and I think we are nearing 1 million revenue on this product already after just a couple of days, and I think 60% roughly of it is out of the US. But you see, 40% is from the rest of the world, right? With Europe first, but then also Asia and South America leading after that. And so I think for us, it will be interesting to see how we can source some of these parts more locally and see if we can actually maybe build this robot in various places of the world and take advantage of the simplicity in a way of some of its design.
All right, Thomas. Certainly exciting times we're living in right now. Thomas Wolf there, of course, the co-founder of Hugging Face, and you saw it there on the screen, that new robot that just debuted a couple of weeks ago, Richie. When we come back, we're going to focus in on Amazon and Amazon Prime Days, the 4-day shopping event, finishing strong after weaker than an expected sales start. We're going to have that discussion after the break. This is Bloomberg Tech. It's the fourth and final day for Amazon's Prime Day. According to consumer data from Numerator, more than 57% of shoppers compared prices before making final purchases, with Walmart, Target, and supermarkets topping final purchase destinations. For what this may mean for Amazon and the economy, we're joined right now by John Shea. He's head of commerce at digital ad agency PMG. All right, John, I feel like everybody these days, we're pretty much all bargain shoppers one way or another, whether you want the bargain or not. I am curious, Amazon kind of set the tone for this. They were the ones pretty much out the gate as a retailer of basically, we're going to offer you all the products you love at a price that undercuts everyone else. Now, everyone's doing the same thing. How do you stand out?
Yeah, so Amazon's definitely setting the tone this year, and it's a very uncertain and different year than years prior. So this is the 11th year of Prime Day. What started out as a one-day sale event 11 years ago is now a 4-day extended event this year, and it's really exciting for the consumer. We're seeing incredible adoption on the sale front. The other thing that we're noticing this year is that the rest of retail's really followed Amazon's lead here. So traditionally, Prime Day has been in the middle of July. They moved it forward this year, a little closer to July 4th. So we're seeing a lot of direct brands simply extend July 4th sales to carry through this full week. And then you've got every other major retailer following suit. Walmart, Target, Kohl's, Wayfair, everybody's running a big summer sale this week.
How do you get the attention, though, of consumers in that, when everyone's sort of doing the same thing and chasing the same set of eyeballs?
Yeah, I think Amazon's playbook here has been pretty straightforward from the beginning. It's about selection, it's about price, and it's about convenience. Amazon's always had a wider assortment through their marketplace than any other retailer. They've always had the lowest price possible, and they've got that trust in the consumer and always come out the highest from a consumer trust standpoint. And the real barrier that's tough to beat from an e-commerce standpoint is you can buy product and have it arrive that day or the next day. On day one of Prime Day this year, on Tuesday, I bought my son Rory a fishing rod. That's a 7-foot pole that came in the mail and got there the next morning. That logistics moat is what really lets Amazon stand out for an event like this.
And of course, yeah, and we always joke about how they're much more of a logistics company than anything else, and an actual retailer, a straight retailer, if you will. They're also an advertising company as well, and they made a big push there, a push that was, I think, initially derided by a lot of folks, but then once they started to see the ad revenue, I think a lot of investors warmed up to it. But everyone's doing the same thing now. Everyone's sort of taking a look at the traditional way of advertising to consumers and realizing you maybe need a little bit more of a holistic approach, and for a lot of companies, maybe an independent approach, one that's maybe divorced from the traditional sort of ad agency model.
100%.
Yeah.
And so I lead commerce for PMG, which is a digital marketing services and technology company powering some of the most iconic consumer and retail brands. And we invest aggressively in technology. We have two platforms. One is Velocity, which tracks billions of data points on Amazon specifically, so we understand consumer signal. The other is Alley, which brings together marketing spend, return, and consumer insight across all channels. And with that, we have a pretty unique perspective on the customer, and all the brands that we're interacting with are trying to look at the customer journey as it moves across search, social, retail, and you're starting to see retail and media coming together in major ways.
Is this sort of a new or relatively new approach, I should say? Is it effective? And by that, I mean, I know there's a lot coming out of the fire hose when it comes to these new ad platforms, but are you seeing, and more importantly, are clients seeing a true return on that investment?
Absolutely.
Yeah.
And so, what we're seeing is in Cannes earlier this year, just a few weeks back, retail media, as it's called, leveraging retailer data to target and measure the effectiveness of media, has become one of the fastest growing segments of media overall. More money is spent on retail media than on TV advertising now. And increasingly, retail data is being used to target television advertising. So at Cannes, Amazon announced a huge partnership with Roku. They're able to take data on consumer behavior on sites like Amazon and then target specifically people based on what they buy in the past. And then you can measure the downstream impact on, did they search for a specific product on a site like Amazon? Did they check out? Did they buy, et cetera? And that's the shape of where this is going, which is really exciting.
Yeah, and you see that with Amazon. There was an interesting deal with DoorDash as well.
100%.
And quite a few other companies have really started to jump on this. Great to talk to you, John.
Yeah.
John Shea there, he is over a head of commerce for PMG. As Bloomberg Tech continues to roll on, we're going to check back in on some of the big stocks moving on the day, and that includes the Mag 7 as earnings season kicks off. A big reaction to Trump's tariff threats and maybe a potential big reaction to the earnings up ahead over the next couple of weeks. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Romaine, Bostick, Ed Ludlow, and Caroline Hyde on assignment on the day, a day where we look at the NASDAQ down for 2 straight days, setting up for what could be a down week, the first down week in 3. Some concerns here about high valuations coming off what have been record highs for several of the big names in that big index, including Microsoft, including Oracle, and of course, including Nvidia. Nvidia earlier this week hitting that $4 trillion market cap, pulling back just a touch, now reversing and now moving higher on the day, up about 1.5%. You see Microsoft there, which hit a record high the other day, adding slightly to those gains as well. And there were a couple of interesting upgrades earlier this week on Microsoft, as well as some of its brethren. The idea that AI is benefiting these companies, not in terms of what they're selling, but benefiting from internal productivity and their own internal use of AI. Meta Platforms down slightly on the day, and you can see CoreWeave still taking it on the chin. Still some concerns here about that acquisition of Core Scientific and what that means for valuations. So as we head into an earnings season that at least for tech ostensibly kicks off in about a week's time with Netflix, and then shortly after that with some of the other big brethren in the Mag 7. Let's bring in Eric Sheridan. He co-leads the tech, media, and telecom group business over at the Global Investment Research over at Goldman Sachs. Eric, great to see you.
Thanks for having me on.
We have this idea that AI is either going to kill us all or it's going to be just the nirvana for everything that has ailed us in the past. And I know there's a lot of nuance that goes in between that. But all of the hype that we've seen since ChatGPT kind of came onto the radar 2.5 years ago, we are starting to see some real ROI for some of the companies that have deployed AI, whether it's to their clients and customers or internally to themselves. And I am curious if you expect to see that really start to show up in the earnings results that we're going to get over the next few weeks.
I think in the form of earnings over the next couple of weeks, there's a couple things I'd point out. You're likely going to see very strong, if not re-accelerating revenue from the cloud computing companies. We would highlight AWS within Amazon, which you talked about in your last segment, and elements of Google Cloud within Alphabet could particularly surprise more to the upside than not. Microsoft surprised very positively last quarter with this theme of going from capacity constrained to less constrained, and then all of a sudden the AI backlogs turn into revenue. Secondarily, the advertising landscape is an area where we're seeing old practices turn into new practices. We're seeing AI as a bit of a democratizing effect on how advertising is made and deployed. We think that's going to build in momentum. We also think on the margin side of the equation, you're going to hear a lot more about efficiency narratives inside these companies, doing more with the employees they have, or even some elements of redundancies leading to better margin trajectories going forward as well.
How much wiggle room is there, though? Because I felt like that was a big narrative a year ago when we saw Meta and some of these other big companies really start to pare back the number of employees that they have with the idea that there was a lot of overlap.
And there was an outsized redundancy move by Meta a number of years ago, and they've been in digestion mode of that since. And if anything, Meta has moved into hiring some very high-priced AI talent in the more recent weeks. But there are press reports around layoffs at Alphabet. There's layoffs at other technology companies in Silicon Valley. And more interestingly, the rate of change or new employee hiring has been relatively flat in the technology landscape, as shown in some of the macro data as well.
When we talk about the potential help to margins by the idea of pairing the workforce, and Microsoft announced 9,000, or we have reporting 9,000 jobs apparently being paired there. They're still spending a lot on CapEx to build out and chase this AI dream. And I am curious about the balance. I mean, getting rid of a few $1 million in salary isn't necessarily going to help the idea that they're spending billions and billions of dollars on CapEx. Where's the balance?
Yeah, I think it's more than just millions. I think there's also processes and workflows and way in which they work internally. So Alphabet's really an interesting company because going back to when Ruth Porat was CFO and now the new CFO, Anand Ashgasani, I think at the end of the day, what they talk about are elements of striking a balance. If we are going to keep investing in AI, we have to find efficiencies in the core business. And generally, these are companies that have been surprising more on margins to the upside than the downside. So they are finding elements of those balance in their own operations.
When you hear people become concerned about the CapEx spend, what is your response to that?
Well, I think the CapEx narrative has been on an evolution. When there was nothing to pinpoint that could measure return on CapEx, it was a little bit harder. In a note we did recently at Goldman, we tried to move the narrative forward a little bit because what had been happening was I'm spending a CapEx dollar, is that good or bad, but how do I measure it? Now what we're trying to do is identify different profit pools that could possibly move from legacy practices to newer AI-led practices. And if there are profit pools you can identify, then all of a sudden you have a dollar amount where you can actually measure ROI. And I think that's what investors have really been looking for. It's one thing to say CapEx dollar, cloud computing revenue. It's another thing to say, how does the AI generate revenue? So we've been trying to move the debate towards that. We're in the early stages of that debate, but I think that debate has to prove out for AI to actually be a technology that scales and earns a return.
And for investors looking for the potential winners in all this, for the last couple of years, it's been a pretty narrow field, at least the ones that in the public markets, obviously Nvidia, some of the hyperscalers. Are you seeing more of a broadening of the AI trade or the AI opportunity trade?
So I think coming back to this profit pool theme in the advertising industry and the note we just wrote, yes, there was a huge section around Alphabet and Meta, and we are buy rated on both. There also was a section around Pinterest and how they're building an AI platform called Performance Plus. That doesn't get anywhere near the coverage that maybe a Meta or an Alphabet does. We are neutral rated on a company called AppLovin, but we said, look longer term. This is another company that you have to keep on your radar screen from becoming more AI first than not going for the longer term. So there are companies out there, again, anchored around some of these industry shifts and practices and themes that we would articulate to watch.
When we start to talk about the use case, the end use case for AIs, to this extent, a lot of at least the more profitable cases seem to be in the corporate space, corporate software, SaaS, agentic AI. On the consumer side, where are we with that beyond just me going to Perplexity and having them ask how to help me plan my vacation?
Well, the secret with consumer internet is there's only three ways to monetize: subscription, commerce, and advertising. We've been at this in the internet for a long time, so consumer internet is going to see all different flavors of that. I'm a Google Gemini Pro subscriber. I'm also a ChatGPT Pro subscriber. I'm paying a subscription to have access to these services. The vast majority of individuals typically monetize not through subscription, but through advertising or commerce. And we think there's going to be elements of all of that at play in the AI world as we move from adoption to utility, which is always the bridge. Whether it was desktop computing or mobile computing, AI is going to be no different.
Do you think those subscription fees are going to go up significantly?
I have yet to see a subscription fee in my coverage of technology over 20 years that's gone down.
All right, well said. Well, I'll just start planning for that right now. Eric, great to have you.
Thank you.
Eric Sheridan of Goldman Sachs there, a closer look at the tech space, a closer look at AI, the end use case, and of course, the big slate of earnings coming down the pike over the next 3 weeks. All right, when we come back, a big week ahead for the crypto space. Former CFTC commissioner and newly appointed CEO of the Blockchain Association, Summer Mersinger, she's going to join us to talk about the push for crypto legislation. This is Bloomberg Tech. Taking a look at crypto exposed stocks rising today, rising on the week. Bitcoin, of course, a big catalyst for that. A rally past $118,000 for the first time ever, a record-breaking rally for the OG in the crypto space. This comes, of course, as lawmakers are gearing up to focus on several key bills for the industry next week. A laundry list, a wish list that now potentially comes to fruition. It's being dubbed Crypto Week in Washington, and it includes the Senate's Genius Act as well as the Clarity Act. Earlier today, the Blockchain Association and 2 other crypto trade groups issued a letter to the House urging it to pass the Clarity Act, saying it represents meaningful progress toward the regulatory certainty needed for the digital asset industry. Summer Mersinger joins us right now. She is the CEO of the Blockchain Association and a former CFTC commissioner. Certainty. I haven't heard that word in this space in quite some time. You think we're finally going to get it, Summer?
I think we're certainly going to get it. We will see at least the Genius Act signed into law, maybe as early as the end of this week. And we're going to see Clarity pass the House floor with bipartisan support and really have that momentum going into the Senate consideration.
This is, for a lot of folks, they see this as a huge milestone, not just so much in that you're getting guardrails and the such, but the idea that you're getting more direct attention from this administration and from Congress, for that matter, for an industry that has kind of been in limbo pretty much since its inception more than a decade ago. Where do we go from here, assuming these bills are passed and signed by the president, Summer?
Yeah, this is really step one. From here, we have a regulatory agenda. We will work closely with the regulators as they put together implementing regulations. So it's not over once the bills are signed into law, but this is such an important first step, and one that has been many years in the making. And it really is historic that there are 3 major pieces of legislation on the floor of the House of Representatives next week that are all about the crypto industry.
Do you think that the rules that are being outlined in the legislation will bring the U.S. more in line with some of the rules that we see overseas? This has been a big bugaboo for a lot of crypto investors, particularly those in the VC space. The idea that, depending on what country you're operating in, you have dramatically different rules, and at least here in the U.S., no rules at all, at least as of today.
Yeah, the U.S. has kind of gone its own way. There are other frameworks out there in other countries, but the U.S. is unique. We've had the most robust capital markets in the world, and we'll have the most robust cryptocurrency markets in the world as well once clarity is signed into law.
Do you think that will attract more crypto businesses to not only do business in the U.S., but more importantly, to set up shop here rather than offshore?
Absolutely. In fact, at the Blockchain Association, we have over 130 members who are innovators and small businesses. They're startups. And not only will we see more of those innovators come on shore, we'll see the ones who are already here grow, bring more jobs to the economy, and really supercharge the United States economy going forward.
With regards to the Clarity Act, and as its name implies, the idea that it would provide clarity as to what crypto is, or at least how it's classified within that regulatory structure, the idea that, at least based on the way the act is written, this would fall under the umbrella of the CFTC, what is the message that that sends?
It sends that these are markets, and they need a market regulator who has a principles-based regulatory framework. That's the CFTC. They're well prepared to take on this jurisdiction, and they have a lot of experience in global markets. They know how to work with other countries to harmonize rules and make sure that markets can be robust and global and really, can be out not just in the United States, but, trading around the world 24/7.
Obviously, one of the big trends, and certainly at least for investors over the last few weeks, has been a renewed focus on stable coins. And that's obviously largely with a couple of big IPOs, including Circle, and obviously really just a big push by the White House and the administration to support that effort. As stable coins start to become maybe a bigger factor in the crypto space, you're already starting to hear regulators, at least regulators overseas, raise some alarms, and that includes the folks at the Bank of International Settlements who are concerned about whether this could usurp some of the sovereign nature of the way finance now is controlled by each individual country and their central banks.
The Stablecoin Genius Act and stablecoin legislation here in the United States is really going to secure the U.S. dollar as the primary backing for these coins. So it's critically important that we maintain that dominance. It's been the currency of choice. We want to continue to see these as dollar-backed stablecoins. And so we're going to look at what works here in the United States and make sure that we are the global leader here in stablecoin issuance and remittance.
All right, Summer, really appreciate you taking time for us. And of course, all eyes are right now on Washington, those three pieces of legislation, the two most important, of course, the Clarity Act and the Genius Act, potentially set to get a formal vote as early as next week, two pieces of legislation that the president has said he supports. Summer Mersinger there, the CEO of the Blockchain Association. As Bloomberg Tech rolls on, we're going to focus in on the robo-taxi, because Tesla is planning an expansion of its driverless taxi service to California and to Arizona. Details on what they have in store. That's coming up next here on Bloomberg Tech. All right, what if I told you autonomous trucks will be the biggest transformation in transportation in a century? Well, that's what the CEO of Aurora says, Chris Urmson. He had a chance to sit down with our very own Ed Ludlow, who's on assignment in Sun Valley, Idaho, to discuss the company's autonomous trucking service, the regulatory environment, and its partnership with Nvidia.
So we really work with them. We're one of their lead customers for this next generation of automotive computer system on a chip. And then we develop the software that sits above that and operates all the autonomous driving.
they're a bit of an unlock, aren't they? It's an enabler.
Yeah, we see them as a strategic partner. Having the density of computation available in a truck, we think we can only get that with the Thor SoC.
It seems that this administration has a different approach, or at least attitude, towards autonomous technology in all of its different mediums. You know, we're talking about the movement of passengers and goods. Do you recognize that change of approach?
Yeah.
And how do you think it will accelerate what you want to do?
It's great to see that whether it's the Secretary of Transportation or the Vice President, both of them speaking about the benefits of automation, particularly in trucking, and seeing them have statements on the record and starting to push initiatives to support this technology, I think it's vitally important. This is going to be the biggest transformation in transportation in a century, and we want America to be leading it.
If you allow me to, Chris, you have been for a long time one of the leaders in Silicon Valley, at least, looking at autonomous technology. That might actually be a little bit of an understatement. But what I find consistently comes up is concern from Silicon Valley or American-based engineers that recognize maybe the biggest technological competition is in China right now. In your domain of autonomous trucking, where do you see the most progress being made on the engineering side and also, I guess, the regulatory environment?
So I think we're ahead. Right?
In America.
I think we're ahead globally, right? I think Aurora right now has the best technology. We can do things literally no one else can do safely on the road. That said, we cannot afford to rest on our laurels. Right, that as a nation, we've lost technological leadership in so many places. This is a big, important one, and it's ours to go win. So let's go do that, and we appreciate both at state and federal level the support we're seeing for the technology, and now it's on us in the corporate sector to go and deliver, and go and compete and help win.
And that was the CEO of the autonomous trucking company, Aurora, speaking with Ed Ludlow out there in Sun Valley, Idaho. As we move on away from autonomous trucking to robo-taxis, because Tesla is aiming to bring its driverless taxis to California and Arizona, plotting an expansion on the heels of last month's limited rollout in Austin, Texas. Craig Trudell joins us right now, who leads our automotive coverage. And Craig, I'm a little lost in the sauce here as to exactly where we stand with the robo-taxi rollout. I mean, I sort of look on paper as to what Bloomberg has reported, but then, of course, like everyone else, I follow Musk on X, and he seems to think that we're much further along than maybe what the media has been reporting. Where are we?
Yeah, I think yesterday was a good example of sort of the ways in which Musk can sort of command the narrative in this really meaningful way, because you had Tesla stock trade up almost 5% for the day, and a lot of activity was going on his X account. One bit of posting had to do with bringing Grok to Teslas, which he says is coming in a matter of days. But some of his other posts had to do with sort of where Tesla is going to deploy next and what it's going to be doing in Austin, where, as you mentioned, they have deployed, but it's quite limited. He said they're going to go into more of Austin with their driverless vehicles. But what he said about, this idea that the company is going to deploy in San Francisco pending regulatory approval was a bit misleading, in that he sort of suggested regulators are holding up Tesla when, in fact, Tesla has not even initiated the process of getting the permits it's going to need there.
Well, that's what I'm curious about. I mean, anyone who's been in some of the cities we've talked about, particularly out in California, I mean, we've seen alternatives on the street already. Obviously, Waymo appears to be really leading the pack. I mean, millions of miles clocked in those vehicles already. Where does Tesla's robo-taxi stand in terms of the miles that it's actually logged in this process?
Yeah, in California, they're at zero. They have a permit to test vehicles with a human behind the wheel, and of course, the companies in the space, very much distinguish between that and actually putting cars out on the road that doesn't have a human, in the driver's seat. And Tesla has not taken that step yet after. Many years now of that being, sort of an opening. The company, I think, has really sort of leaned into this messaging that they're on their way, but a lot remains to be seen in terms of proving that.
All right, Craig Trudell, who helps to lead our automotive coverage here at Bloomberg. As we wrap up this edition of Bloomberg Tech, we want you to tune in on Monday. Bloomberg Tech will be back along with its regular hosts, and they're going to be live from Panasonic's new EV battery plant out there in Kansas. And don't forget to check out our podcast on the terminal and elsewhere.